Eric Muathe with Muathe.com. Now everybody is familiar with the Fibonacci retracement tool. For example, here we're taking a look at the chart for Under Armour, all data monthly. And of course, everybody is familiar with the use, or at least has knowledge of the use of the Fibonacci retracement tool, where we look for retracement either at the 50% level or 38.2 or 61.8. So that's really pretty much been well documented. Lots of content and educational material on how to use the Fibonacci tool on the price retracement. Now, one thing that I don't know or haven't seen anybody else talk about is using this on the RSI. So pretty much what I want to discuss here is how you can take the same tool and use it on the RSI. Now, I think once people start appreciating the use of the Fibonacci tool on the RSI, a lot of things will pop up. Here I want to take a look at how this could have been helpful in the stock UA. All data here, take a look at 61.8 retracement, and we'll also take a look at the 38.2 retracement. Just take a look at that. And so what I'm going to do here, this is again all data monthly. I'm going to draw a line somewhere around there. Now this line should be as close to 61.8 as possible. Gives us a lot of information, and we just go to the main part. We can see that once the stock moved below 61.8, it dropped in 2007, and again it would come back years later. In 2010 it broke out there, moving above 61.8 for this breakout, and of course we started a nice fantastic run that took it from about, let's call it $5-6 all the way to about 55 in a couple of years. And also, interestingly enough, we come here and bounce on 61.8 for the lows here and here, which were successful lows. We come here with uniform activity below 61.8 and back above it for the re-entry period here and here. Very successful. And what you see here is there was a period recently where it tried to move back above 61.8. Unfortunately, looks like it was resistance. As you can see, it was rejected here and here again for the highs there and there. Since then, obviously, we've seen the stock drop and drop significantly. So using that 61.8 has been a very strong tail on the stock over the last, let's say, since its inception. Now let's draw a line at about 38.2. And what we have here is at the lows here in 09, early part of 09, you have uniform activity below 38.2 and back above it. And right now we are looking at the stock coming here and breaking support or potential support at 38.2, which might explain why for the month early on in December 2016, today being the 7th day of December, it is already down about 15% for the month, as it is moving below 38.2 right here. So you can see that by using those two levels of 38.2 and 61.8, one can draw a picture as to how the stock has been making major moves either for support, breakout, or failure. So it only makes sense that we start paying more attention and learning how we can use the Fibonacci retracement tool not only on price but also as far as the RSI is concerned. Eric Muathe with Muathe.com. As always, good luck, peace, and blessings. ERCS.